All right, what up, everybody? It is Jeremy with Escape Velocity Trading coming at you for our market bias update report for Sunday, July 28th for the trading week ahead. Diving right in here, last week only took a couple of trades, ended up down about $1,000 after being up about six and then down about six. Ended up down about $1,000. Took a couple of trades on Bitcoin once again that smacked me in the face and robbed me of the gains that I had earlier in the week. Uh, Basically just mistimed it. I jumped in on an intraday chart that was just before the most recent push higher, and I was looking for that breakout to occur and just mistimed it and had just tight enough stop that knocked me out once again. So unfortunate to report another week of basically neutrality. My win or loss ratio per trade, if I'm doing futures, is usually somewhere around a $5,000 risk. So $1,000 loss, not great, but not detrimental to my overall trading platform. Anyways, looking for the week ahead, diving right into our economic data. This is going to be a big week ahead and a very important week. So we are going to start right off on Factory, Forex Factory, and looking at the overall smattering of economic data that is coming out. Monday is a reprieve, don't have anything, but starting Tuesday, you can see the massive list of important economic data that is coming our way. And each one of these reports is going to have a potential to impact the market fairly drastically, especially because we are sitting in a part of the market right now, which is where we are seeing significant rotation out of big tech names, especially, and into either the Dow Jones for a flight to safety to dividend paying stocks, and also into Russell 2000 and small cap indexes and small cap stocks, looking for that catch-up trade to continue as rotation comes out of the big tech flyers that have been going on the AI theme for the better part of the last 6 months and into areas that might play some catch-up. So big week. Just to highlight one of these, I'm not going to bother reading off all of these. You can read them on the screen here. Pause the video if you need to. The biggest one, we do have our FOMC meeting and press conference coming on Wednesday. The market is highly anticipating Jay Powell and the Federal Reserve keeping rates where they are one more time. You can see the 50 to 25 range. So looking at that, oh, excuse me, this is for September. I was going to say we're actually one notch above that for July meeting. Excuse me, the 525 to 550. That is where we are currently. 95.9% of the market is anticipating that to stay the same one more time. But then if we go out to September, we are looking at our first potential cut in September, and almost 90% of the market is baking that into current prices. So it'll be really important for Wednesday's statement if Jay Powell holds rates where they are, and also if he gives any kind of indication that we are at that precipice of starting our rate cut cycle. That is going to be very impactful. So keep your eye on that. Otherwise, same thing as always. We're just looking to see if inflationary data is continuing to come under control and if unemployment claims or things get to the point where they do anything wild, because unemployment claims are a big way that the Federal Reserve kind of checks the health of the market and to see if there is a need for stimulating the economy or not. So unemployment claims is going to be really important, and pending home sales and ISM PMI data is also going to be very important. But anyways, the one that I'm going to be tracking the most and will probably watch live is the FOMC statement, and then also the press conference to follow on Wednesday. Dropping out to our heat map, since we're already here, you can see tons and tons of red, and not just little bit of red, but large losses in Microsoft, Nvidia, AMD, Avgo, Apple, Google, Facebook, Amazon, Tesla, EI Lilly, all of these big name, mostly tech driven companies that have had massive gains over the last 6 or so months on the AI theme. Money is coming out of that. Smart money is taking profits in those areas of the market, and they are rotating into the areas of the market that pay dividends, and also those small cap stocks that benefit from rates coming back down. And for anyone that doesn't understand why small caps benefit from that, the short answer is basically that big cap tech stocks aren't as negatively impacted by high interest rates because they typically have a lot of cash on hand, which means that they can continue to invest in their business, they can continue to grow regardless of high interest rates. But small cap stocks, on the other hand, don't have that ability. They usually don't have a big cash reserve, which means that they have to borrow money in order to invest in R&D and to invest in growing their company. And when you have high interest rates, it costs more to borrow money. So they don't do that as much. And those companies tend to go stagnant and go sideways for long periods of time, like we've seen on IWM or the Russell 2000 futures market. And so now that we're finally getting to the point where rate cuts are coming, people are taking profit out of the big tech areas and they are rotating that money into companies that haven't had that big boost in price yet, that they are anticipating larger moves higher, relatively speaking, to come as that smart money rotates out and takes profit on tech and then rotates into other areas of the market. So we're seeing that rotation right now. And basically, we are sitting at a point, this is the daily for S&P, so let's just dive into our chart analysis. We're sitting at a point where we have had a significant drawdown. If we click here and draw our little tool here, we've had about a 5% decline off of all-time highs so far. If we go back over here and find the high price and draw down, you can see the last big drawdown we had was about 6.6. And if we toss that out to a weekly chart, you can see obviously we are still in an uptrend. We have not stopped the higher highs and higher lows that define an uptrend. We had high or a low here, higher high, higher low, higher high, higher low, equal high, higher low, higher high. And now this is potentially a higher low. We need to see where this ends up stopping. And if I zoom in a little bit right here, you can see really we have some room potentially to fall while this trend will still remain intact on the weekly chart. We could really come back down into the 5360 level on the S&P, and this bullish uptrend would remain intact. And that is still about a 2.5 or almost 3% move lower from where we currently are. On the weekly chart, we are opening here on Sunday for the futures open right at our weekly 9. So this candle is going to be important to show us if we are holding the 9 as a momentum indicator and moving higher from here, or if price reverses, goes below this, let's call that 54.95 level, then the next stopping point would probably be down to 53.60. So that is kind of the level that I'm looking at on the S&P 500. Any bounce here in the short term, I am kind of anticipating either getting stuffed at the 9 EMA on the daily chart or back up to the 20 SMA and or the round hole number of 5,600. So any bounce up into these levels, I am expecting price to come back down and at least retest this 50-period moving average. If that 50-period moving average breaks, then like I said on the weekly chart, the next stopping point would be down to 53.60. So those are the levels that I'm keeping an eye on. Other than day trades, I'm not going to be playing anything to the upside on this. Hopefully we get a rebound into the 5,600 level, go sideways for a couple days, clean that up, give us a little high base or something, and then break out. That would be triggerable to the upside, signaling the bulls were back in charge. But until then, need to be a little cautious here and wait for some kind of a pattern to form. Also, if we drop this back to a weekly chart really quick and zoom in one more time, you can see we are actually getting a divergence on our RSI and on our MACD on the weekly time frame for the first time in a while. And for those that don't know, divergence is basically where you have lower pivot highs on the RSI or the MACD showing momentum is decreasing, while over that same time frame continuing to set higher highs on the actual price chart. So you can see these lines are sloping down, lower momentum, and this one is sloping up over that same time frame. That is divergence, and it can signal the end of trends. So we just need to pay attention to that and make sure that we don't let that get out of control. Ideally, we want to see this come down a little bit into the 70 arena and then pop back up. But it wouldn't be the worst thing in the world to see continued rotation here and to get some kind of reprieve, because we have had a massive, massive run this last like 6 or 7 months. And it's not healthy to just go straight up in the marketplace. You need those ebbs and flows. You need to set new levels of support in the market so that when something bearish catalyzes in the market, you have somewhere to come back down and hold support to keep that bullish trend alive. So right now, this development actually feels very, very healthy to me. Not super worried about it yet, but if we do get below the 50-period moving average on the daily chart, like I said, heading back down to 53.60 and then seeing if that level will hold is kind of my base case. If we go out to Nasdaq, very, very similar conversation. Even on the daily chart, you can see a decrease in momentum here and divergence on both the RSI and MACD much more significantly than the S&P. And again, this is because the AI theme that had been driving this massive run has now taken a pause, and we are seeing significant selling and profit taking in the technology sector. Dropping out to a weekly really quick, just so you can see, and I'll remove those drawings again. Again, still uptrend is intact. We are still holding our support level right here at around 18,350. And we have the 20-period moving average on the weekly chart that is fighting for support around 18,940 currently. So don't want to see it get below those two levels. If it does break the 20 on the weekly chart, somewhere down here around 18 to 18,300 is going to hopefully hold as support. But staying away from any bounces in this area, especially because our 9 EMA has now crossed the 50 in a bearish manner, and the 50 is starting to level out and flatten here. We want to see that start to curl higher again, and that only happens if price gets back above that level and starts pulling that moving average higher. So right now, staying away from tech. Not super interested in shorting it because that AI theme can come back, and it is still there. We haven't obviously hit the end of AI by any means, but I think the earnings situation that we are in right now, coupled with the rotation due to the Federal Reserve cutting rates, is just putting a cap on a growth in that growth area of the market. So just being a little cautious there right now. Going out to the Russell, honestly has not done anything wrong. Had this huge move higher that back somewhere in here in late June, I had been saying keep an eye on the Russell because we were about to get a big move as soon as rate cuts start to happen. That happened a little bit sooner than I anticipated and just came out of nowhere with anticipations of rate cuts coming, but not actually being there yet. Right now, there's not really a new trade until we get back above 2,300. If we close above 2,300, we can toss this out to a weekly chart. And you can see this is a very, very important level. This 2,300 level, we tested above a couple of times in this massive, almost year-long or 9-month-long consolidation after a huge, huge move higher off of the COVID lows. Broke above, got up to about 2,460 and then tapped out, and then bear market ensued. We've now broken out of that bear market. We are officially in a bullish uptrend on the Russell 2000. I would like some more consolidation here, honestly. The longer this consolidates, the more I will like a breakout and run. If we do break out and run from this level, we do have a little bit of resistance up around 2370 and then nothing until 2460, pushing all-time highs. I am expecting continued move higher in the long term. On the short term, we just have to see the 9 EMA hold, hopefully go sideways a little while longer and let the 20 SMA catch up and then act as support for a catalyst to move higher. We also have catalysts coming potentially when rates actually start to get cut, and it's not just something we are talking about in the market, but it's something that is actually happening. Like I said before, the market is pricing that in potentially for September. Going out to the Dow Jones, I don't often cover the Dow Jones, but I think it's important here because we have a long-term consolidation here going back all the way until March, end of March. We've been just in this sideways, large range, choppy mess for a while. Broke out of it a couple of weeks ago and now have pulled back, tested that as new support, and are moving higher. And this is really because of that rate conversation as well. When people are rotating out of tech, and there is a rotation in the market. Right now, people are rotating to the small caps that have a large percent chance of having a catch-up trade, moving back up towards all-time highs. And they're also moving out of those big tech names because people are expecting them to cool off and potentially continue to sell for a little while. And they're rotating into the Dow Jones due to the dividends that are paid with big Dow Jones companies. So that is a big driver right now into this. If we zoom in just a touch, you can see we did actually get a really nice bullish retracement. doji candle, and now we've got confirmation to the upside. I don't see any reason why this isn't going to come back up and retest the 41,500 to 41,672 range. That is kind of base case right now. I would be surprised to see this roll over and head lower. I think the path of least resistance is definitely up. Going out to Bitcoin. Bitcoin is starting to wake up, and the only hesitation that I have right now, I do think that there is a large bullish catalyst for this, just due to the supply and demand after the halving event that just happened that halved the rate at which new Bitcoin are being mined and put into circulation. We do have diagonal resistance a little bit overhead. My base case is coming back up. If we can break above 70, I think we're going to be just a stone throw away from 72. So about a 2,000 point move there if we are able to break above and hold above 70,000. If we can't, my base case is coming back down and basically holding this 50 period moving average around 65,000 and just kind of consolidating in this range for a little bit. But if we do break 70,000, that does set the stage potentially for momentum to come into the market. And then the sky's the limit. Who knows where we will go from there. But if we do start to get some momentum to the top side, this could start to get really, really interesting. Just a little bit too early to tell if we are quite there yet. Going out to crude light. Crude light continuing to struggle. Below its 200, below its 50, below its 9, below its 20. So all of our moving averages are now above us, acting as resistance. We are oversold on the RSI on the daily chart. We are in bearish territory on the MACD. If we toss this out to a weekly time frame and zoom in a little bit here, you can see that we have broken down below the weekly 200, and that is not great. It is one of only 2 times in the last couple of years. This candle here about a month and a half or 2 months ago, and last week. These are the only 2 candles that have closed below this weekly 200 line in the sand for quite some time. So it's a little bit concerning to see that close below. Hopefully we get our heads poked up back above this and we can get some momentum. But OPEC has not been jumping in to stabilize the market in especially the oil crude light arena for a bit now. That thesis has changed a little. So it's going to be interesting to see how price responds here, and don't have a clear read on direction. There's just too much resistance above us, but we are oversold. So right now, staying away from crude light until something changes and we get some kind of a pattern to develop. Going out to gold. Gold right now still kind of trapped in choppy range. We are setting a higher low right here. If my drawing tool will cooperate, there we go. As opposed to the line in the sand that we had here. So we had support there. Now we came in, set a low here a few days ago, and we are pushing back into the upper end of this kind of sideways channel. Wouldn't be surprised to see this break out, but for that to happen, the US dollar needs to chill out and continue to go down. So right now, honestly, base case is probably sideways to slightly bullish, but I still have my gold positions covered with cover calls currently. Going out, let's check out silver, and then we will wrap up. Silver showing a lot more weakness than gold. We actually had a double top pattern confirm. You can see side 1 here, tested, side 2, came down, broke that support level, and we are now underneath. Any bullish move on silver needs to be looked at as a shorting opportunity for the time being on the daily chart. If we go out and check out the weekly chart, that gets even worse. We are below the 9 and the 20, and we have quite a ways to potentially fall until our next support level. Our next support level isn't until 2620, 2622, somewhere in there. And then down to the rising 50. I'm guessing by the time price got down there, if we do break and run to the downside, the 50 will probably have crawled up to that 26 to 26, 22 area. So that is kind of the base case for silver. Usually silver and gold run in tandem with one another, but they do diverge from each other every once in a while. And it looks like this is one of those instances where they are not going to potentially run in the same fashion with one another. So with that, guys, as always, trade safe. Let me know if you have any questions. If there are any stocks specifically you want me to look at and analyze, drop them in the comments, message me, hit me up in our Facebook group. And if you are not a part of the free Escape Velocity Trading Facebook group, hit us up. Link is in the description here, and request to join, and I'll be more than happy to add you to our trading community. Until then, guys, talk to you soon. Bye.